In part one of this mini video series on Meta, I went over why Meta stock went down so much, and I'll actually link to that at the end of this video. In this video, I'm going to share the 3 ways that I'm valuing Meta. So smash that like button and subscribe if you're new. You're watching More Money. Let's get it. All right, guys, let's dive right into it. The way that I'll organize this video is first look at the forecasting of revenue considerations. Then second, I'm going to look at the expense forecasting considerations. And then I'm going to look at the 3 different types of valuations, which include the EPS valuation, the adjusted EPS valuation, and I'll give you a reason why I'm adjusting EPS, and finally, the free cash flow per share valuation. So let's get right into it. Now, when it comes to looking at revenue with Meta, we got to look at 2 items. The first, of course, is their daily active user growth, and the second is pricing considerations. With daily active users, it's no surprise that we are experiencing a slowdown. From here, you can see that although there was a year-over-year growth in the number of users using the platform on a daily basis, you can see that North America and Europe have largely matured, and the only areas experiencing growth going forward are Asia and the rest of the world's geographic segments. So when I'm forecasting this out, I'm only forecasting an overall 3% year-over-year growth, and all of that growth is coming from Asia and the rest of the world segments. Now, what this is a forecast of the number of platform users. What this isn't is an indication of revenue growth. This is because revenue per user has increased over time at a rate that's faster than user growth. Let me show you what I mean. From here, you can see that the worldwide number of users increased from 1.4 billion users in 2017 to 1.9 billion users in 2021, or a 36% increase overall. In the same time period, you can see that revenue actually increased from 40 billion to 117 billion, or an almost 3 times increase in revenue. And this is happening because over time, Facebook is managing to monetize their user base more and more, in addition to just growing their number of users on their platform. So this is all to say that just because I'm only growing the number of users at 3%, doesn't mean that I'll be growing the revenues at 3%. In fact, you can see here in the forecast that I'm growing revenue at 10% for every year except 2022. This reflects Facebook's ability to continue to increase its revenue per users in 2 ways. One, they are going to attempt to bring more advertisers onto the platform. And 2, they have the ability to increase pricing for increased advertisers. Or at least that's the prevailing opinion. We'll see how that plays out in the future. The second part really reflects something unique for Facebook and other advertising-based platforms, where they really are able to increase their prices at a rate that's faster than the rate that their costs are going up, as they already have the installed infrastructure. Now, to round out the discussion on revenue forecasting for Facebook, for 2022, I'm forecasting 7%, which is right there in the middle of their 3 to 11% guidance for Q1 2022. Their reasons for slower revenue growth in Q1, in my opinion, sounds like it's more pervasive for the remainder of this year. So I rolled this guidance for the full year. I may be overly conservative here. We'll wait and see how this plays out. Okay, so now that we're done with revenues, let's move on to the expense considerations. Moving on to the expenses, this part can get a little bit complicated, so let's just start with the cost of revenue. I think the 19% range is pretty reasonable to where it will likely land going forward, so that's where I'm forecasting it. With R&D, I think that 21% is the sweet spot, so I'm keeping it there for the time being. I'm careful to see if this ticks up, but note that some of this R&D, of course, is going into Meta, so this does not reflect the true cost to run the core operations, and so when we adjust EPS, this is where we're going to take some costs out of. With marketing and sales, this one is a hard one. 12% may be the right point, but it could be higher. Nonetheless, the balance will be captured in G&A, as I've really juiced that up. So with G&A, this is the complicated one because in the past they have been running G&A at a high single-digit area, but management has guided that total expenses for 2022 are expected to fall in that low $90 billion range. So in order to get there, I increased the G&A. This account is really just acting like the catch-all for the additional expenses that we need to capture. Irrespective of which bucket you put the added costs into, the important takeaway is that Facebook or Meta is just expected to be less profitable going forward, and so I forecasted it in that way. Now, moving forward into the EPS valuation, if you carry that down, you'll see that I'm using 2 discount rates. The 5-year discount rate is 5% because I like to think that I have visibility into the next 5 years with the inflation rate, albeit the past year has proven otherwise. On the terminal level, I've used a discount rate of 11.5%. This is a personal preference. Discount the cash flows in any way that you seem fit. I'm using a 20 times multiple because I still do believe in the core business's ability to increase pricing over the long term, as this company is expected to benefit from inflation just like Google is. Also, I believe that they will continue to grow their international revenues. Finally, there's a huge opportunity here from Meta, which I provided zero value to. So with all of that, I'm arriving to a value of $240 per share. Now, there's only one problem when you use this type of valuation methodology. You're including expenses that relate to Meta. And under US GAAP, this is how this should be accounted for. But for management accounting purposes or investor accounting purposes, I see this as an investment separate from the core business. So I think it would be appropriate to take some of that research cost out, which if I take 25% of the R&D cost out and put it back into the bottom line, I didn't tax affect it, by the way, just to keep it simple, I arrive at a valuation of approximately $300 per share. Now, I understand that this is complicated, but the good news is that I make this model completely downloadable to the Patreons at the $5 a month level. So download it and change the inputs to what you think best reflects the business operations. And if you want to avoid all of the complexity, you can just value Meta using the free cash flow per share methodology. From here, you can see that I'm forecasting free cash flow per share as a percentage of revenue using historical performance of approximately 29.5%. From there, you can see that I'm using a valuation multiple of 20 times, a medium-term discount rate of 5%, and a terminal discount rate of 11.5%. So basically the same items as the other valuations, and I arrive at a value of approximately $300 per share, so pretty bang on with the adjusted EPS valuation. So that's how I'm valuing it. Now, there's a lot that I don't know that could come down the pipe with Meta, and I do believe there are risks that I may just not be aware of. As a result, I'm looking for at least 1/3 margin of safety, i.e., I'm looking to buy it under $200 per share. Ideally, since I'm super greedy, I'd love to get it for around $150 per share, but I think that's very unlikely to happen. You never know. And here's where I lose some of you guys. Some of you guys think that just because I'm valuing it at $300 per share, I would buy it for anything under $300 per share. That's absolutely not how I think about investments. I think of this as arbitrage. So the lower I can get it relative to where I'm valuing it, the better. For example, right now I'm valuing Alibaba around $300 per share. And so when it's trading at $100 per share, it becomes an incredible opportunity. Now, guys, I do my absolute best to bring you non-hype research focused content. So if you don't want to miss out on any of the valuable content that's released on this channel, please consider subscribing to the channel and ringing that notification bell to be notified once I upload those videos. You really can't afford to miss any of the content here. Also, if you missed my video on where I completely went over Meta and the happenings of the previous quarterly results, no worries, I got you. You can get to the video where I covered that all right here.